Welcome to another episode of the Financial Armor Show. My name is Brad Cooper, the president of Cooper Financial Investments LLC, and your host. But also, we have an amazing co-host. I want to bring in Tony Shore. Hi, Tony. How are you doing today?
I'm doing great, Brad. How are you doing? That's the question. I mean,
Um,
you've been busy and crazy, right?
yes, we were just talking before the show. There's just so much going on. I don't know if what's worse, the 110-degree temperatures we're experiencing now in Arizona, and that's not letting up. But thank God for air conditioning. In addition to that, you know, things at the office are great. I tell you what, Tony, it seems like day by day we go by, and just a blessing is the term I want to use of the people that we're meeting, the
That's
impact
great.
we're making in their lives, the education and the advice of really setting them up for financial success and to achieve their dreams and goals.
Yeah, that's great, Brad. And I know that's why you do what you do. And I know that, God is good. There's been a lot of
Yes.
blessings in your life lately. And I know getting to know people and helping your
Yes.
clients is one of them. And just everything that you've been going through with the family and just
Yes.
health issues, and we've been praying for your wife, and I think that's great that things are moving along in that area. That's good. So and your business, I know you've been really busy on top of it, so
Yeah.
uh,
Just
always busy.
so much to be thankful for. And we have a big following, Tony, and a lot of our clients listen to our show. And
Yeah,
I've been keeping everyone updated with Shelly, my wife.
yeah,
We're going on 3 weeks now since she has officially received a new kidney. So
yeah, that's
maybe if you're
amazing.
tuning in and you haven't heard, so again, just very thankful for just the blessings, whether it's personal, family, business, and I'm going to give a shout out to Mayo Clinic in Phoenix. I couldn't ask for a better healthcare institution that is definitely first class. And I get it now, Tony, why people from all over the world come into the Mayo Clinic system, whether it's Minnesota, Phoenix, or other locations.
Yeah.
So big shout out to them. They are definitely first class. Very thankful for the healthcare we have here in the United States and how fortunate we are compared to most countries.
Yeah, Mayo Clinic we are fortunate as a country to have Mayo Clinic. In fact, other world leaders have come to Mayo
Yes,
Clinic and probably there in Arizona too, but the main Mayo Clinic here in Rochester. And I know you've had a great team. They have a great healthcare team that's been a part of the team that's helped Shelly,
right.
your wife. And so that's fantastic. But yeah, shout out to Mayo. Um, Boy, if you can't find a doctor or specialist who can figure it out, you go to that's where
That's
everyone goes.
right.
That you end up at Mayo Clinic, and they usually figure it out. So
And I know why now. Just being plugged into that system and the many visits per week for the next several months. I'm just so thankful. It seems like every time we're scheduling out more appointments for my wife, they try to accommodate your schedule, and they just assume that I'm driving 5 hours or flying in, or and when I tell them I'm 45 minutes away, they said, "Wow, you're so fortunate to be
yeah,
local," because
yeah,
most aren't.
yeah. People come from surrounding states or all over the
Yes,
country. Yeah, I mean
right.
the two prime locations in the U.S. are Minnesota and Arizona. So
Yes,
Rochester, Minnesota, and right there near Scottsdale, so
right.
Arizona. So that's fantastic. Um, and now for our show today, you've picked out a great topic. There's some financial steps that people don't want to miss along their financial journey, but some people overlook these steps and they make costly mistakes by overlooking these steps. And I know you want to help our listeners out there
Right.
make sure they don't miss these steps. So, where do you want to begin with this?
Absolutely. These financial steps, I just came across an article in the last couple weeks from Kiplinger, the 10 easily fixable but often overlooked financial planning items. And I just want to go through several of those because, and some of these are topics and areas that may be a concern that we haven't brought up in a long time.
Sure.
Number one, review your Federal Deposit Insurance Corporation, another term which we're very familiar with, FDIC coverage on your bank accounts. Now, keep in mind, today's limits are $250,000 per individual. As a married couple, that's $500,000.
And when you
So
say limits, that's how much is actually insured by the FDIC. When banks say have that sticker member FDIC on the door, you think, oh, my money is completely protected, but it's only up to that amount, right?
absolutely. FDIC insured up to that dollar amount. So, what would happen, Tony, if you had, say, $1 million in the bank and as a couple, and only half of that was insured, and the bank got into a hardship or went under, God forbid, then you would be out that 500,000. And I would really encourage all of our listeners to really research this a little bit more on your own, because I hear this on a daily basis, from a few people. I just want to keep my money at the bank. It's safe, it's guaranteed. And part of that's true. But I'll never forget, I don't have the article in front of me, Tony, but I read an article a few years ago. And it was a study on FDIC insurance. And if a bank did go under, how long would it take for you to get your money once you make a claim? And this article said anywhere from 4 to 8 years, the possibility.
Oh,
So, not to concern or, create any type of fear, because here's the reality: what happens with the majority of banks that have had issues, and most of this happened back in what, 08, 09.
yeah.
Most of the time, other banks will come in and buy them out and insure, and business goes on daily. But that's one important thing I want you to really pay attention to, is making sure you don't exceed those limits. And in my opinion, I believe that, and we're going to talk a little bit more about this, is pay attention a little bit more to not only how much money you have in your bank, but also what interest rate they're giving you.
Yeah, that's a good point, especially now when there are ways to get pretty decent interest rates on uh balance protected, principal protected accounts. And to go back to your first point, I think the overall point there for our listeners on that first financial step is make sure you don't have all your eggs in one basket, or
Right.
even too big of an amount. I don't care if you're worth $10 million and you've got $1 million in the bank. You probably don't want a full million in the bank, even if you're worth more, even if it's on a smaller level. But you don't want your whole retirement savings, especially, or all your investments in one place, right? You need to have
Absolutely.
diversity, have a few different options, and look at how is this protected. And there's similar insurance companies have insurance for your money. And I think it's about 200, same limits, pretty much
Right.
$250,000.
Yes.
So make sure you know what you're doing with these, and make sure that you talk to a professional, and that's where you come in, right? But you're right, interest rates. That's a huge thing. I mean, the Fed just came out and said, "Hey, we're not going to lower them yet."
Right.
So we're still dealing with some pretty decent interest rates on some different types of accounts and investment vehicles out there, right?
Absolutely, Tony. And you just brought back a couple memories, true stories that I just remembered. One with, I think I was maybe 12 years old. So just a few years ago, Tony. But when I was 12 years old, a bank in our local town went under. And that's where
Hmm.
all the farmers and a lot of people kept all their money,
Yep.
including items in their safety deposit boxes. And I'll never forget, it was a minimum of 2, maybe 3 years before they were allowed to get access to their safety deposit boxes. And
Oh,
also before another bank came in, bought them out, and they were paid out. So when you talk about being diversification, don't put all your eggs in one basket. So true. But
yeah.
also, why is paying attention another important, is here about maybe 3 years ago, I was visiting with a client, and she was helping her parents with their money, and they've done pretty well, but not organized.
Mm.
And we found after the fact, actually, the daughter did a statement from a bank. And we looked at the statement she sent to me, and it had $675,000
Oh
in
my
the account.
goodness.
She said, I have no idea where this came from, and my parents don't remember. So we did some research. I ended up going down to the bank with the daughter, who's the power of attorney. And this money, Tony, had been sitting in a checking account for
Oh,
at least 10 years, maybe even more, like 15 years. And on the statement next to interest rate in bold was 0%.
can you imagine that amount of money for that amount of time? What it could have made in the market, or even in something as low interest as a CD or a MIGA,
I know.
a multi-guaranteed annuity, or yeah, I mean, there's, or in a 401k or an IRA, the stock market. Wow. Any place it would have made more money.
You're right. And
That's
I
crazy.
calculated it probably would at least doubled in the last 10 to 15 years
Mm,
based on what rate they could have got, probably even more. But
yeah.
again, pay attention, keep organized. That's what we do a lot at Cooper Financial, helping our clients get organized, consolidate their accounts. But going back to interest rates, again, you're right, Tony. The Feds came out and rates are going to stay steady. So shop around. The days of being loyal and staying at the same bank or insurance company for auto insurance, homeowners insurance for all your life, those days are gone
Yeah.
because things change. There's no loyalty out there. So a good example is I was just in a meeting a couple weeks ago, Tony, with a couple new people, and they've had, I think around 175 to $200,000 in their account at the bank. And I
Hmm.
said, pretty good emergency fund. I don't think,
Sure.
it's wise to have that much, but what interest rate? And they started laughing. Oh, we're getting maybe a quarter of, 1% at the very most, not even that. And I said, you need to shop around. And I gave them several different institutions that they could research, and large institutions, larger than their current bank, that were paying 4 to 5% money market accounts, no fees, 100% liquid, money that they could transfer and transfer out within 24 to 48 hours, earning 4 to 5%. So there are accounts out there. If we sit down together with people, we'll go through various accounts, and I'll share exactly what we're doing and what I'm doing personally as far as taking advantage of some of those, low interest or, higher interest accounts. Even though they're still low, they're still
Yeah.
higher than less than 1%.
Well, yeah, and the goal is to try to keep up with inflation, especially nowadays with the cost of things
Oh,
having risen exponentially over the last few years. You've got to keep up with inflation, and I just shudder to think that somebody with a large amount of money in an account earning no interest. So not only they think, well, it's protected, my principal's protected. Well, not all of it's protected, because only a amount is protected in a bank.
right.
And even if they do, the bank stays fine, which is good. You're losing money. They lost a lot of money because of inflation.
Yeah.
The $500,000 when they put it in there, or 600, isn't worth 600, the same 600,000
No.
today. It's worth a lot less. And so if they'd had it in something that could have doubled it, then they would have made money, not lost money. Because it would have kept up with interest, right? Even at
You're
5%, you're
right.
keeping up with the rate of interest currently. So that's really good.
Absolutely.
Yeah.
And shame on their bank. We end up meeting with the
Yeah.
branch manager, Tony, and I said, explain this. They have been loyal customers of your
I can't
bank for over 60
fathom it.
years. 60 years.
Yeah.
And she said, I have no explanation. And I don't blame you taking it out. I would do the same, is what she
Yeah.
told us.
Wow.
So, but another important thing to really pay attention to when, as we're talking about, various financial planning items that are often overlooked, is on an ongoing basis, review your beneficiaries to make sure they're current and they're reflective of your wishes. And life changes.
Yeah.
What's the divorce rate today? Over 50%. One good example, which we see a lot, because one of the things that we do very well, of many things at Cooper Financial, is we'll do what's called a beneficiary audit. What does that mean? We'll go through not only all the accounts that we establish for you in your family, but any other accounts we're going to address. Who's the primary beneficiary? Who's the secondary beneficiary? And most often, especially with divorced couples, we come across at least one, if not more, accounts that the ex-spouse is still the primary beneficiary, Tony.
Right. And people think, oh, well, that's no big deal. I changed my will. But beneficiary designations on accounts they take legal precedent. They are
Yes.
what goes. So the money will go to whoever's listed as the beneficiary, no matter what you've said verbally or you put in your will. An official
Right.
will, signed, notarized, witnessed, and put together by an attorney does not take precedent over a beneficiary designation. That one went all the way. You told a
Yes.
story in a previous show where that went all the way to the Supreme Court, and they said, nope, that's you have a legally binding document with that beneficiary designation. So that's what's going to take precedent. And you're right, that happens. You hear about it all the time. Like people left their money, ended up going to their ex-spouse instead of their current
Yes.
spouse and children, and that's just devastating. But not even just divorce, but any big family changes. Let's say you did it when you were younger, and you had a 19 or 20-year-old in college, and you said, well, if both my wife and I, they're responsible, whatever, it'll all go to him. But then they maybe they're going through a messy divorce, or maybe they had a tragic accident and passed. So there's deaths, divorce, marriages.
Right.
Sometimes people have problems with addiction or things like that. You want to make sure you have the correct and best beneficiaries for primary and secondary. And a lot of people, I'm guilty of this. When I did beneficiary designations, I'm like, well, I don't know who would be a secondary. Left it blank. So you
Of course.
definitely want to, and then if the person, your primary, passed away, predeceases you, and you don't change it, then that has to go to probate court, and it's that money then, or that asset is tied up, and leaving your other loved ones in a bad situation, or your spouse. So that's not good.
No, not at all. Another thing that just recently happened in the last, I would say, 6 months, this couple had, way many years ago before I met them, had their children, two of their children beneficiaries, 50-50. And what happened was they passed away. And before that even happened, Tony, one of the children had an accident and special needs, dependent on the government. So getting help, insurance, and other assistance from the government. So when the money was distributed 50-50 to the kids, the two, basically that cut off most of the benefits that the special needs daughter was receiving. So
Because it showed she had all this income
yes,
as income, and so they stopped providing any benefits, or cut a lot of the benefits. Yeah, I've heard of that too. That is tragic. So you really want to make sure you have things in order, and I know this is something you help your clients deal with,
right.
and help them prepare for, and make sure they don't make critical mistakes. That's a financial step people think beneficiary designation, what's the big deal? When I fill out my 401k, I put my wife
Wow.
or my son or my daughter, and then I'm done. And so it's not always that straightforward. You got to review them on a regular basis and think about the options and the possible outcomes.
Absolutely, and that's a big conversation. Part of our initial consultations is estate planning, and do you need a trust? Do you need a will? Do you need both in
Sure.
some cases? So
Yeah.
that's something we take very serious because, like you said, Tony, the beneficiary designation will trump any will, and the money will go to whoever's listed on
Yep.
that account. So
Yep.
so another thing that's overlooked a lot and not taken advantage of as much if you're still working is a HSA, Health Savings Account. So if you have that privilege or opportunity at your employer, take advantage of that. And we sure have. And there's tax savings and benefits by putting money in that account and using that for present or even future healthcare expenses. And that amount you can put in is increasing each and every year.
Yeah, HSAs are a big deal, and you can put money in there and leave it in there and wait to use it until you're in retirement. And it's one of the only accounts in the IRS tax code where you can put money in tax free. It's
Right.
pre-tax, so it doesn't show up on this year's taxes. So it's a good current tax benefit. And then the money you put in there grows tax-free. And when you take it out, there's no tax on any of it, the principal or the interest. Of course, it had people say, well, I have to use it for healthcare. But what are healthcare expenses in retirement?
Oh,
There's still, even with Medicare, there's a lot of expenses. It can get expensive for healthcare in retirement.
yeah. I just read an article, Tony, a few months ago from Fidelity.
Yep.
They updated their previous report from a few years ago, and they said if you're 65 today, from 65 to 85, a 20-year period, the amount of out-of-pocket healthcare expenses that the average American will be out in that 20-year period, and this does not include long-term care, nursing home expenses, everything else, $261,000
Oh,
out of pocket. And
yeah.
that's with Medicare, having a good supplement, but that's what the average person from 65 to 85 will be out. So, that's where,
Imagine having an HSA that you've been socking money away in, and then in retirement, you can't keep putting money in once you're no longer working or have that
right,
high deductible insurance policy. But once you hit Medicare age, you can still hang on to the HSA. You just can't contribute it to it anymore. But
correct.
imagine being able to at least pay a lot of that off tax free and have the money saved. So that's one great way to do it. I'm glad you brought up HSAs.
Yeah. And speaking of the lines of employees, employers, business owners, I just want to mention this because uh, I would say 100% of the business owners I've spoken to the last several years, and this happened to me several years ago. A lot of business owners, Tony, will keep a lot of money in their business accounts, normally under the umbrella of a limited liability company, an LLC or an S
Sure.
corp, and I'll never forget. I'm going back probably 9 or 10 years ago. We updated our trust, and I was sitting down talking to my attorney friend who's been a guest on our show and going to be
Yeah.
on again probably in the next month, CJ Eager. And basically, I said, CJ, I'm having issues. I went to the bank where my business account is, and I wanted them to change the beneficiary or add a beneficiary to my business checking account because that's where we keep at that time, a lot of our, cash for liquidity and
Sure.
reserves. And they would not allow me to do that. You cannot set your trust up as a beneficiary under an LLC. So what CJ Eager with Copper Canyon Law had to do, he had to do a special filing with the state of Arizona corporations and redo a few things with my trusts, which are very minor and very inexpensive. Therefore, allowing if my wife and I die, whatever money's in my business accounts, my LLCs, would automatically be dropped down to my trust and then distributed and not go through probate court. So if you're a business owner, know of any business owners, have an LLC, S
That's huge.
corp, you got to pay attention to that because that's something that not one person in the last several years I've talked to, successful business owners, realized or knew.
Wow. Yeah, I did not know that. That is huge. And so, obviously, there's a couple of things there. If you're a business owner, especially if you're an independent operator, a business owner, you own your own business, really any level, but small business on up, you should work with a financial advisor like yourself, and you should have a good estate planning attorney that can help you. And in that case, you need a trust. But yeah, I've heard it's tough to go into a bank. You have to know what you're doing and work with a good attorney to get a beneficiary designation put on any bank account. At some banks are just like the people that work at the bank. So some of them don't know and say, no, we can't do that, or we don't recognize that form. So you really need a good attorney to help you, estate planning attorney. And I'm looking forward to having CJ on to talk some more about that too.
And we'll get in a little bit deeper, because it's one thing. And I was thinking of another bank I dealt with that we had a small amount of money with, and I went online to request a beneficiary form to update my beneficiaries. I wanted to make a change. Long story short, it took me 3 months before I talked to the right person. They had to mail out. They, couldn't email it to me. They had to snail mail it to me, and the process there. Yeah. And as difficult, which it's kind of ridiculous to think about, to add beneficiaries to some brokerage accounts, bank accounts, that's going to be another topic for a different show, is what happens when you lose a loved one or you die and you're the beneficiary, and trying to get that worked out on the other end and the beneficiaries being incorrect. What a nightmare.
So it's just, those are all great financial steps you've talked about today, not to miss, but we're almost out of time. So let our listeners know how they can talk to you if they have any questions about this, and get a plan in place or get a second opinion on where they're at with their finances or retirement savings, things like that.
Absolutely. And, before I get to that, thank you for all the wonderful questions that you submit in that we receive. But if you have a question, or just want to sit down over a cup of coffee, or right now, maybe cold iced tea, since it's so hot outside, you can call our office directly, toll free at 888-390-5277. Again, that's 888-390-5277. Or you can visit our website, which is financialarmorshow.com. Again, financialarmorshow.com. And you can submit any type of question, or as many questions as you want, online, and we will get back with you with answers. If we don't have answers, we have some of the smartest, brilliant people that we can reach out to in the United States to get those answers for you.
All right. Thanks, Brad. Appreciate it. And listeners, thanks for tuning in. That does it for today's episode of the Financial Armor Show with our host, Brad Cooper.
Thank you, Tony.